Stocks trade soft on mostly tepid earnings and uncertainty over tariffs as the August 1 US trade deal deadline nears. Realty, metal and pharma see some green while IT continues to drag.
IndusInd Bank reports margin improvement and a dip in credit cost in Q1, but analysts don't see it earning a healthy return on assets for some years. The street awaits the appointment of a CEO as the next cue.
A Supreme Court bench headed by CJI Gawai is slated to hear JSW Steel's review plea on Bhushan Power and Steel today. The Apex Court's decision on the matter is being keenly watched and will be critical for JSW Steel.
L&T's hydrocarbon offshore vertical bags an order worth a lot of 1,000 crores, more than 15,000 crores in West Asia. The order entails EPC work, installation of offshore structures and upgradation of existing facilities.
U.S. Trade Representative Jamieson Greer says more negotiations are needed with India on a trade deal, adding that the discussions have been constructive, but U.S. needs to see how ambitious India wants to be. Very good afternoon. Hello and welcome to our halftime report from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra. With me is Manglam Malu and Vinny Motiwala. Well, it's turning out to be a session where we are definitely trading with trepidation, you'd have to say. So it's just about a range-bound day of trade with a negative bias, and around 130 odd points is what the range has been for today's trade at this point. However, watch for the 56,000 level on the Bank Nifty, because that becomes a crucial level to watch out for. And lot of stocks in focus, however, some of them bucking the trend. So, for example, Tata Chemicals is higher, JB Chemicals ahead of its numbers tomorrow, and even Torrent Pharma reacting to its numbers today. So that seems to be standing out. We do have a lot of results to watch out for. Case in point would be from the frontline space, L&T and Asian Paints. So busy day ahead in terms of stock-specific cues, but as of now, market doesn't want to please us with any gains.
Busy day indeed, Ekta. But you know, what's interesting is that every time there is an attempt to recovery, there is an equally vociferous attempt to decline from the highs as well. That's what took place yesterday. Let's see whether the second half of trade today sees some selling or not. Volatility is expected also because it's the Sensex monthly expiry that takes place today. So we'll, watch out for that. But a couple of sectors doing extremely well today. Real estate really stands out. So we have Lodha Developers, which is higher in today's trading session. We did see some traction come by in a couple of these other, real estate players as well. So the Nifty real estate realty index comes up for you on this screen. It's mildly in the green as against the other parts of the market which are fairly in the red. Puravankara over the last 5 minutes or so has seen a big surge, and this has come on the back of good volume. So just pull up the intraday chart of Puravankara, nearly 14% in terms of an up move taking place out there, and the stock generally has been a bit of an outperformer. But by and large, from the frontline pack, the other one that I'm looking at is Bharti Airtel as well. That's seeing some fresh long positions being added and supporting the cause of the bulls for now. The one metric that I'll keep an eye out on very closely as the day progresses is the advanced decline lines, because they've been flittering between green on the top and red on the bottom and alternating through the course of the day, and now fairly close with 1,400 stocks in the red for around 1,200 in the green. Hi, Vinny.
Hi, good afternoon. So yes, you all have mentioned some bit of those positive coming in, but we're seeing some bit of a pressure surely coming in on some of these banking names as well. So continue to keep an eye out on that one. Axis Bank, Federal Bank, all these continue to be in under pressure today as well. IndusInd Bank, the numbers were not as bad as the street was expecting. So muted performance there is what we're seeing. But we will start with the management at first corporate for today, and that's on the back of its earnings, and that is eMudhra. Now, we saw a muted quarter that came in for eMudhra in Q1. When you're looking at it in terms of a quarter-on-quarter basis, muted growth. Year-on-year basis, strong growth. But what is the outlook of the company going forward? We do have Venkatraman Srinivasan, Executive Chairman of eMudhra, joining in with us to talk to us about the outlook. Good afternoon, sir, and thank you so much for joining in with us. Let's just start by talking about your revenue. Overall, what you've done this time, quarter-on-quarter basis, it's around 0.1% growth. Year-on-year basis, 59% growth. last time in your con call, you had spoken about, your revenue guidance at around 650 to 700 crores. And this time, I believe you've increased the lower end of the guidance. So what is keeping you positive, or what are you bullish on in terms of drivers for the growth? What are the trends that you're seeing specifically on the BFSI government side of the business as well?
Yeah. So if you see on the first quarter, we have achieved revenue of around 150 crore. Generally, if you see the Q1, it is a weaker quarter for the digital signatures and also a little bit weaker quarter for the enterprise solution. Generally, the Q2 is much better. Q4 also will be much better. So in the Q1, if you are able to get 150 crore, 150 into 4 on the, if you just to project that itself can come to 600 crore. Then we are also doing an acquisition. We have announced an acquisition of a company called Cryptas. So that itself is quarterly 25 crore per quarter. So 3-quarter revenue of that is also there. So with this itself, around 675 crore will be possible. So that's where we felt that 700 crore would be achievable. So this is the basis. And on this again, BFSA and government both sector, the order book position and pipeline is continuously improving. So that's where we feel that this guidance of around 700 crore is an achievable guidance.
Okay. So, just want to understand, obviously you're talking about that Cryptas acquisition as well. In the last year, you've made other acquisitions on the AI front as well. What is the growth that you've seen in these inorganic growth acquisitions that you've made? So what is the growth in these companies versus what is your core company's growth?
One is, if you see last year around 36% growth, on that organic growth was around 18.5%. Balance 17-18% is due to the acquisitive growth. So this is how the combination is there, and this time also this kind of a growth will be there, around half of organic and acquisitive growth.
Okay. And what about margins, sir? What is the expectation there as well? This time, the company has managed to see EBITDA margins of around 23%. It's the similar range that we saw in Q4 as well. What are we expecting over there? And given that you've made these acquisitions, it's expected to have a short-term impact on the margins. Then what is the short-term range?
One will be if you see the Cryptas acquisition, what you have announced, it is a little PAT negative, but with the more and more integration and driving the synergy, we have to bring it to positive, which may take maybe 2 to 3 quarters. But at the same time, whatever our product we are selling, the margins are quite good. So that's where on a combination, we hope to maintain the margin, even PAT margin around 16.5%. And EBITDA margin at the current level. So we feel the margin will not decline. It may not immediately dramatically improve also, but at the same level, we will be able to maintain the margin.
Okay. All right. If you could just tell us quickly, you did have some loss to competitors in terms of the digital signature certificate reselling. You did lose some amount of it to competitors. Can you just give us a sense in terms of what kind of pricing competition might you be seeing at this point in time? And what are the competitive dynamics that you're facing in FY26?
Yeah, if you see the digital signature, if you see 2-3 years back, there were only 3 to 4 players. But now other certifying authorities are predominantly for the defense industry, for the Reserve Bank like that. They were not public certifying authority. But now almost some 10 to 12 public certifying authorities have come. And they are all selling in the same market. And at the same time, the digital signature certificate volume has not increased, but it has declined by 20 to 30% because of some of the taxation use cases have been simplified. So,
Mr. Venkatraman, I'm afraid we'll have to leave it at that right now. It's a short interaction that we had because the Home Minister Amit Shah is currently addressing the Lok Sabha on Operation Sindoor. So let's hear that out. Thank you for joining.
तब इस पर मुक्त चर्चा भी होनी चाहिए, चिंतन भी होना चाहिए, आगे न हो इसकी व्यवस्था की भी चिंता होनी चाहिए। माननीय अध्यक्ष जी, मैं विषय पर आने से पहले आपके माध्यम से सदन को और सदन के माध्यम से पूरे देश को ऑपरेशन महादेव जो कल एक हुआ है, इसकी जानकारी देना चाहता हूं। माननीय अध्यक्ष जी, कल ऑपरेशन महादेव में सुलेमान उर्फे फैजल जट, अफगान और जिब्रान 3 आतंकवादी सेना, सीआरपीएफ और जम्मू कश्मीर पुलिस के संयुक्त अभियान में ऑपरेशन महादेव में मारे गए। और माननीय अध्यक्ष जी, ये जो सुलेमान है, ए श्रेणी का लश्कर तोयबा का कमांडर था। पहलगाम हमले में और गगनगिर आतंकी हमले में वो लिप्त था। इसके ढेर सारे सबूत हमारी एजेंसियों के पास है।
Okay, so that is the Home Minister talking in Parliament, and we'll get to more details with regards to Operation Sindoor as well as Operation Mahadev, which took place yesterday. But as of now, we need to take a short break, and as we do that, a small programming note for our viewers. As the workplace transforms, so must leadership. In the Bengaluru edition of Future Female Forward Season 3, India's top business leaders gather to reimagine what inclusive leadership looks like and how women are powering the future of work, capital and innovation. Catch it live today, this evening at 5:30 p.m. onwards, only on CNBC TV18, CNBC-TV18.com and YouTube.
Welcome back. Just look at the intraday chart of Varun Beverages. That stocks recovered from the lows, but the company has reported its presentation and it tells you a few weak things that took place during the quarter. Remember, there were unseasonal rains and as a result of which the summer sales were weak. So for carbonated drinks, their volumes actually fell by 5%. And if you look deeper, the India volumes for the company declined by 7%. So telling you that demand was fairly hit during unseasonal rains this summer, and as a result of which there was weakness in the overall performance. Though how much of that is in the price or not is something that we will have to consider going forward. But speaking about numbers that came in, we did have Thangamayil Jewellers, which reported their numbers yesterday as well. A near 28% jump in their overall revenues, but the profits after taxes were lower by 19%. EBITDA was lower by 6% because the company chose to invest excess savings into brand building and promotional activity, and higher depreciation led to lower profits as well. What's the way forward? We do have with us the management of the company joining in. We have, the company's leader, S.M. Lakshmanan, the Vice President of Finance and Accounts, on the show. Thanks a lot, Mr. Lakshmanan, for joining in. The obvious question, demand in the second quarter, because gold prices are now off highs. What are your target gold and silver volumes for this year and the margin outlook for this year as well, given increased promotional spends, store opening expenses and brand building that you're likely to do? So what do you stand by for the full year?
Good afternoon, Mangala. Thank you for the opportunity. Thangamayil Jewellery Limited has achieved a turnover of 1,555 crore rupees for the first quarter FY 25-26, a retail revenue YOY growth of 28%. In terms of volume, during the first quarter, gold is at -4%, silver volume increases by 11%, diamond volume increases by 22%. As far as the current quarter Q2 is concerned, the company is expected to maintain the retail revenue year-on-year growth of 28% during the Q2 as well.
Okay. So you're targeting 28% in Q2 in terms of revenue growth?
Yes.
And what about the entire fiscal? Your earlier revenue guidance for the entire FY25 was 25%. So are you increasing that? Do you stay at 25%?
Absolutely. The company will be able to do a retail revenue growth of more than 25%, and probably the company could look at a revenue of top line of 6,000 crore rupees for this financial year 25-26.
Okay.
So, what about your store addition plan as well? You've plans to add around 10 stores. Does that still hold, or would you look to add more?
Financial year 25-26 started with a store count of 60. 2 showrooms had been opened during the first quarter. 2 more showrooms have been opened during this second quarter, July month. The present store count is 64. These 4 new showrooms which have been opened in Chennai, along with the flagship showroom that have been opened during the last quarter of financial year 24-25, have all been doing satisfactorily well. And the company is looking at 11 more new showrooms for this financial year in the remaining months, taking the new showrooms tally to 15 for this financial year.
All right, so 15 stores for this entire year. That is an accelerated number because you haven't been adding as many stores in a lot of years in the in the past. Mr. Lakshmanan, you
and Mangalam, just to interrupt, predominantly most of these showrooms are going to be in Chennai, and probably
Yes.
a couple of showrooms could be in other parts of Tamil Nadu.
Yeah, you had called that out as well because earlier you didn't have much presence in Chennai, but after the flagship store in Chennai got great response, you are increasing their presence out there as well. And in terms of a market, it's a lot bigger market than the markets that you currently serve. But let's talk about margins, because opening in Chennai means higher costs. Opening in Chennai means better, expenditure towards promotions, etc. And that's seen an impact on your margins in the first quarter. Your margins have come down to 5.4%. On an EBITDA level. What is it that you're targeting this year? You've given us a target of 6,000 crores on the top line. What kind of EBITDA and margins are you targeting this year?
Yes, Mangalam, EBITDA margin for the first quarter is at 5.78% on the retail sale. In my earlier CNBC discussion, I had mentioned that the company would like to retain or maintain the EBITDA margin target of 6%, and the company continues to stand at that level. And but for the few expenses, probably the company consciously has spent towards media, advertisement, brand building for the ongoing expansion activities in Chennai, and to some extent the staffing expenses. All these expenses which have been incurred in a front-ended manner for the expansion activities that is going on, the revenue benefits we will be getting on an enduring basis in the coming months, quarters, and years.
And
Okay.
On silver, you said that the volumes had seen a big surge, nearly 40%. Obviously, with gold prices rising the way they did, people would have looked at silver as an option as well. Between gold and silver, what gives you bigger margins, and how do you expect silver volumes to pan out this year?
Absolutely, Mangalam. The first quarter, the company has seen a non-gold revenue growth of 34%, which is a highly encouraging one. And as you very correctly said, this will try to increase my bottom line as well.
Okay. So overall, you're targeting 6,000 crores in terms of top line. You're targeting 6% in terms of margins. It's looking extremely bullish, Mr. Lakshmanan. What is the downside to this? What is the risk to your numbers and the risk that you are possibly factoring in to this margin picture?
Margin, we will be able to maintain probably closer to 6% certainly, as the non-gold revenue seems to be giving us a boosting reception, especially in Chennai. And the other factors will be able to keep the EBITDA at a 6% level. And let me also tell you that as I mentioned in my earlier discussion, that the gross margin the company has seen are coming to the double-digit level. We are at 11% for this quarter, and all these seem to be giving us a good boost that we will be able to maintain a double-digit gross margin as well as the EBITDA at 6% going forward.
Okay, so just a quick word, target for SSSG, what would that be for FY26?
Yes, for the first quarter, the company is at 6.83% SSS. This is over and above the last year's 19.76%. And this has been able to be achieved by the company even in the midst of 32+% increase in the gold price. So the company will be able to come back to the double-digit SSS percentage as the volumes and the revenues scale up going forward.
Okay, so that's by the end of the year we could expect that coming back as well in double-digit SSSG growth. Okay, sir, thank you so much, for joining in with us this afternoon and giving us insight in terms of what we should be watching out for the company going forward. That was the management of Thangamayil jewelers. As of now, the stock is down 0.6%. But on that note, we're going to submit a very short break. A reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18 Access. Our premium members only experience on CNBC-TV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and masterclasses and curated lifestyle benefits. Welcome back to Halftime Report on CNBC TV18. Obviously, a couple of names buzzing on the back of their earnings. But, a lot to watch out for in the world of F&O as well, given that the market has been quite muted. What are we keeping an eye out on now? Nigel is joining in with us for that.
Well, that's right. Actually, the market's been muted. And if you look at the Nifty, the intraday pullbacks as well have been quite feeble. But if you want to look at a couple of positives, one is the advance decline ratio. That's not falling apart. You have close to 1,200 stocks that are advancing, which is a pretty good sign out there. So the broader markets, it's not that bad today, which is encouraging. The other point I'm looking at is the Nifty as well as the VIX. If you look at the VIX, we've fallen more than 1,000 points from the top. But the volatility index hasn't really perked up. It should have been at high teens at the least. It's still holding at around 12 odd. So that will give the bull some kind of comfort. Moving to the options data then, the PCR at the start of the day was around 0.64. That's moved to around 0.68 approximately. There's call as well as put writing in today's trading session, and the option writers, they are taking the money. That is, they're writing the premiums, they're pocketing the premium, and the premiums moving down because the IVs as well are crashing out there. So just look at the 24,700 call. Premium out there, it's down to sub 100 rupees. If you look at the 24,900 put as well, the premium has crashed from around 100 rupees to around 82 rupees approximately. And the 26,650 put, well, at the start of today, the premium was more than 80 rupees. That's come down to around 60 rupees. Short point is the writers seem to be at play today. And just looking at the data points in terms of technical levels, in terms of the options data as well, the broad sense is the crucial support comes in around 24,550. So if we have to see a bounce or a short covering bounce, this level needs to hold out. If that gets broken decisively, then we're easily seeing a further slide down. On the upside, 24,850 going by the options data, that's the first level of resistance. There can be a pullback, but you'll get further confidence once you get past the 24,850 odd mark. Stocks that I'm looking at, and before that, the Nifty Bank, that's the one that's actually broken down the last few days. So if there is something that needs to bounce, then the Nifty Bank needs to get its form back. Currently it's trading below the 50 as well as the 20 DMA. Finally, in terms of stocks, GAIL is seeing some bit of short covering in today's trading session. That's why, as the con call progressed, the open interest is down, the stock is mildly higher. And you have Marscon Dock as well. There is some selling in the cash market, but there is some unwinding of positions as well that we're seeing on that one. And finally, RBL Bank, that's in the F&O band. But there is a likelihood it's gradually moving towards that 80% of MWPL. It started the day at more than 95% since it was in the band. So watch out for that one. If there's further unwinding, then it could possibly come out of the band. Back to you.
Okay, all right, Nigel, thanks very much for that. That's on the F&O space. But we do have Hormuz now to take us through the stocks that are moving around in trade this afternoon. Hormuz, over to you.
There are plenty of earnings reactions, and start with the positive side first, considering we're in a little bit of a wobbly market. So we'll start off with some positivity. Paradeep Phosphates is the name here. 11.5% higher, strong results coming in there. And interestingly, the stock is now up 5x from its IPO price, which was around 42 rupees. And even today, 6 crore shares have already been traded compared to its 20-day average of just 60 lakh shares. So it's a new high for Paradeep Phosphates today. Lakshmi Organic is the other one, a not so pleasant earnings reaction, 7.5% lower on that stock. It's the second day of losses, and this too has declined on strong volumes in today's trading session in comparison to its 20-day average of 3 lakh. Already 13 lakh shares have been traded. Good Luck India is a positive mover in today's session. Over 2 lakh shares have been traded, a 20-day average of 70,000, 9.5% higher on that stock. And Fed Bank Financial Services, or FedFina, reported results yesterday, but it's been an underperformer, up 5% today, but this is only the second time in the last 7 sessions that the stock has gained, and despite this move, the stock is trading below its IPO price. So earnings reactions are plenty, and some underperformers like Fed Financial as well.
All right, Hormaz, thanks a lot for that. With that, we'll move into a short break. Remember to tune into the all-new CNBC TV18 Prime, which brings you insights from policymakers, business leaders and economists, all of them shaping both the India and world's future. We have CNBC TV18 Prime that decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. You can tune into CNBC TV18 Prime at 12 noon daily for the Global Reset. At 1 p.m., you have the Big C, which speaks about cryptos and commodities, and Global Lens as well, which is at 8:30 every weeknight.
Welcome back, and joining us on the show now is Sabyasachi Ray. He's Executive Director at the Gem and Jewelry Export Promotion Council. Mr. Ray, hi, thank you so much for taking time. And clearly, the month of July seems to be ending well for you, especially with the India-UK trade deal done. And one of the major beneficiaries clearly is going to be the jewelry exporters here.
Thank you, Manisha. I think this is a great time for the sector with the India-UK CETA. We are calling, the ministry is calling it CETA. The FTA which has been signed, of course, is a great news because the figures, whatever, if you look at the figures, UK imports total $92 billion of, gems and jewelry from the world. And from India, they're only importing 3.5 billion. So sky is the limit. That much I can tell you. So,
all right, 90 billion and 3.5 billion. Where do we stand at this point in time? How was 2024 as a financial year? And what is the expectation now with CETA in? What numbers are you guys working with, let's say, for the next 2 or 3 years?
If you look at the numbers, we are exporting only $450 million of jewelry, where UK is importing some $3.5 billion of jewelry. So we are looking at to increase it, ramp it up to more than 2.5 billion another next 3 years level. Because we have seen that a lot of silver jewelry is consumed there and we are not consuming that silver jewelry. Now, if you look at the UK deal, I'll just tell you something, is that if you look at UK is also having a large South Asian population, And if you look at South Asian, when I talk about South Asian, it is Indians, Bangladeshis, Sri Lankans, Nepalese, all these people, all are wearing the kind of jewelry what we export or the ethnic kind of jewelry. So that itself is a captive market. And if you have seen in recent times, Malabar, then this Kalyan, etc., all have set up their shops there. So it will expand. The retailers will expand their shops to sell with these people. Of course, they will start with these people, but going forward, we'll also export to the expats. Recently, we have done a India-UK buyer-seller meet, where we have seen, we have targeted the studded jewelry, diamond-studded jewelry, which is mostly targeted in the local UK population. We talk about the whites, basically. And there also have seen a huge interest. They were not knowing that India manufactures this kind of, diamond jewelry. They're exporting from, or importing rather, from Hong Kong and etc. So that itself is a huge market in itself, and we will have huge inroads into that kind of market where, of course, India is not having a footprint. So overall, because in all these segments, you have to understand that the whole duty has become totally zero. So we'll have very good competition in terms of when you talk about Hong Kong or China and etc., and also Thailand.
Oh, well, absolutely. From 2.5% to 4% or thereabouts, it's a 0% duty export right now. So clearly, I do see that happiness and smile on your face. Mr. Ray, also, while UK being done, and you're talking about more than double the numbers in the next 2 to 3 years with UK, but the conversations with US are still happening. I do understand GJPC has been making a lot of representations there as well. What is that, number one, and a two, that we can anticipate as that trade deal goes through, as it does?
No, you have put me into a very difficult situation because nobody in India is talking. Of course, what we have heard, our Honorable Minister has talked, that the talks are going on a very good pace and at a robust rate. So he is very hopeful and he is very confident. But when we have talked to him, so if that, and also you have also talked, I think the media has also talked, and this is what he's speaking. And when you look around, we have seen day in and out, different kind of agreements going on. But one thing we have to also notice, yesterday also I was noticing, let's say there is a deal with EU, or there's a deal with Japan, or there's a deal with Indonesia. Everywhere where you have seen is that nothing has come out on paper the exact. Like when I'm talking about UK, right now when you are sitting with me, I'm talking about each of the HS codes.
Exact numbers.
And exact numbers, that means what are the import duty there and what is the PSR, that means the value addition, but everything. So, and FTA, when we are talking about, in fact, if you have seen, our Prime Minister told that we will be signing a bilateral trade agreement with US. Now, bilateral trade agreement should have all these details, isn't it? We should not be having only some announcement or only some papers, paper announcement, etc. So
Right.
I think India is going for a comprehensive deal where all these details will come out, and that is where I think we'll score over the other people or other countries in the world.
All right, Mr. Ray, thank you so much for joining in. So clearly, UK deal done, but US still a bit of a question.
All right, Manisha, thanks very much for that. So that's the update coming in on the commodity space. Just want to point out we had two numbers which came in. We had Strides as well as Happiest Minds. Strides should come up for you where there was an exceptional loss which took place, but on a PBT level, the profit is lower on a year-on-year basis. So Strides is up around 4% reacting to its performance this quarter. And the other one is Happiest Minds. Revenue is absolutely flat this time. EBIT up around 17% on a sequential basis. Happiest Minds, the stock is quite happy at this point. So up around 5% currently for Happiest Minds. So three result reactions, Hind rectifiers on your screen as well, reacting positively to its numbers, up around 8%. So Strides, Happiest Minds Technology and Hind rectifiers, all three of them seeing a positive outcome.
Absolutely, but on that positive outcome, let's actually just slip into a very short break. And after the break, we're going to be connecting with the management of Chennai Petroleum to decode their Q1 FY26 numbers and what we should be watching out for in FY26.
Welcome back. Chennai Petro is the stock on our radar. Reported a weak set of numbers in the first quarter. The weakness in results was due to the inventory losses and lower GRMs as well. H. Shankar, the managing director of the company, now joins us. Thanks a lot, Mr. Shankar, for joining in. And notably, there was an adverse reaction on the stock as well post those numbers. So the first obvious question is, what led to your GRMs, compress so much? Because your peers reported numbers, despite having a shutdown, their numbers were a lot better. So why the weakness in your GRMs in the first quarter? What do they stand at now? And what's your outlook for this entire year when it comes to gross refining margins?
Yeah, good afternoon to all the viewers. I think before we step into this GRM, I think one important parameter that we need to discuss is about the physical parameters, because that indicates the strength of the company. That also indicates that how we are actually doing with respect to our operational abilities. So in this regard, I think one important point is that consistently, if you look at the last quarter of 24-25, followed up by this quarter, we have been consistently doing more than 100% of the capacity utilization. At the same time, you should also appreciate that the operational excellence has led to a good level of distillate yield, which is about close to 80%, fuel and loss below 8%. These are all like great benchmarks when we look at performance. Now look at the performance with respect to the crude pricing and the overall financial result. Then it gives a different picture altogether, in the sense that if you see the core GRM, but what we call about as with respect to operation, it has been consistent with our last quarter also. At the same time, there has been an impact on the crude level, because of which the reported GRM is showing around 3.2. So I think when we look at our peer, that is what the comparison you are talking about, I believe that these are all comparable figures with respect to the overall performance of the company. And this is more or less in line with what a standalone refinery like our peers we are talking about. These are all in this almost comparable levels at which we are operating now.
So as of date, what does the GRM stand at? And at the same time, do you have any shutdown planned in the second quarter?
See, today when we are looking at our operational level and the GRM parameter, I think we are doing quite well now. The outlook is quite looking very good now. At the same time, we are looking at a window for shutdown, maybe towards the end of Q2. We are looking at it so that we can improve upon our operations going in future. Like, for example, if you look at our last year, 24-25, we had a shutdown coming in 24-25 in the month of September, October. And after that, our operational levels have really improved quite a bit. So I think this is very important for the health of the refinery and also for the reliability and operational excellence. So we are planning sometime around end of September, but looking at it, we have to also see the economic viability, how things pan out, and then freeze the date.
Okay. So, Mr. Shankar, is it fair to assume that maybe Q2, Q3 is when you're probably looking at a shutdown?
Yeah, Q2 end, we can fairly assume as of now. That is the plan we have now with us. So we will be also evaluating it down the line, maybe 4 weeks in advance. We will take a call because we have to necessarily tie up all our crude requirements and also the product upliftment with respect to the availability of the shutdown. So 4 weeks down the line, just before the shutdown, we will take a call on that.
So what would your, bottom line look like for the entire fiscal then in FY26? Because you were marred by inventory losses this time round. You are looking at a shutdown going forward as well. So if you have to talk about, say, even the bottom lines, would it be a majority, maybe a first half loss that we would see for the company?
No, it is not. It is too premature to really assume such a kind of statement now because, see, we are looking at an operational level of very good, and now looking at the current cracks position, it is really improved quite a lot. And we are also looking at a very positive July, August months to be coming up. So September is towards the end of the quarter that we are looking at. So with the current level of cracks and the crude price which has stabilized, I believe that Q2 we should be doing quite well. And I don't see any reason why. It's a very marginal red we are looking at now in the Q1. So we should be able to recover this, and Q1, the H1 should be a good result. That is the expectation we really have.
Okay, we're expecting better performance in Q2, and overall H1 will see better performance as well for the company. Right. But Mr. Shankar, IOCL, recently told us that the refinery project, which is with the company, that is on hold. Could you tell us what has led to this? What is the impact that we could be expecting, and any impact in terms of your future projections that come in? Because I think you previously spoken about this Kaveri refinery that would add around $1 to $2 to your bottom line once it's commissioned. So, any change in terms of that and the impact?
Yeah, see, the refinery which was originally planned, it was a totally fuel-based refinery, which had about 6% of petrochemical intensity index also built in the project structure. And we had a lot of plans to move towards the higher petrochemical requirements in the phase 2 of the original project. So now, along with our principal, Indian Oil, we have been reworking on the project economics, and we were also looking at the project configuration so that if we are able to increase the petrochemical part at the beginning of the project itself, instead of going into phase 2 and further planning down the line, we have taken a call. How about looking at the configuration once again? And based on the configuration, we expect that the margin, what we are talking about down the line, would be much improved as compared to So therefore, the reconfiguration is under study now. And then based on the final outcome, we will be again going back and submitting one more final report before we embark on the construction execution activities.
Mr. Shankar, running short on time, just final 2 numbers before we let you go. One number you alluded to, fuel and losses, that has come down below 8%. Could you give us a sense, for every 1% reduction in F&L, what is the impact, the positive impact on your EBITDA? That's one. And second, on your debt, what does your debt stand at, and what's your deleveraging plan? Because finance costs have come down over the years.
Correct. So coming to the fuel and loss, I think if you look at the overall percentage, every 1% of the fuel and loss that we are able to save, it almost gives us 500 to 600 crores of saving on an annualized basis. So that is the big number that we are looking at. So that's a significant amount of saving that can come with respect to the fuel and loss. Now, looking at the second part of your question regarding the that was regarding your
debt.
You said, right?
No, that was debt.
See, debt part. So debt equity, see, we are maintaining around 0.5 now. We have about 4,000, which is mostly related to the processing of our short-term requirements. And that is a very small portion of it. And we really do not foresee any problem because we have been repaying many of our long-term debts and processing it and finding out the lower cost of interest which is prevalent. So we are actually taking the advantage of that, and we are leveraging all our long term with respect to the low interest rates that is prevailing now. So yeah.
Thanks a lot, Mr. Shankar, for joining in and giving us an outlook on the company. You sound fairly optimistic, as a result of which we will watch out for better performance coming in the first half of this year and thereafter as well. We'll keep an eye out on the shutdowns that you plan to take. With that, we'll take a short break. On the other side, we will have more news and updates coming in for you.
Welcome back to Halftime Report on CNBC-TV18. And as of now, we have seen a jump up coming in the Nifty. We started the show with it in the red, but now it's moved on to the green side. 24,700 about that mark is what the Nifty is trading at. Broader end of the market also is managing to outperform right now the Nifty 50. So that's going to be seeing interesting moves coming in there. So keep an eye out on what's going to be happening in the second half of this trading session today. But, with that, we'll wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.